Well, hello, friends and relations and other interested parties. Welcome to another version of Hawk's Sentry Report. I am Hawk Arps, Vice President of Arps Traders Toolbox, and this is the Sentry Report for the week beginning Monday, July 18th. Well, here we are in the dog days of summer, and the markets still have a lot of good trading opportunities to show us. So, you know the drill. Let's take a look at some charts and see if we can identify some technical analysis for some potential trading opportunities. First, let's turn to our Sentry toolkit. In the past several video blogs, we've talked about this list of symbols here, which are synthetic symbols made up of ETFs relative to the SPY, whereby I can use our Sentry indicators to see the strength of different sectors and aspects of the market relative to the SPY. And what we're seeing this week is not that different than last week. We noted last week that all of the American indexes were pretty much doing better than the S&P. Now I'm seeing that the Dow Jones is looking a little weaker than the S&P, but the Russell is still leading the pack. It's got a triple trender score of 6, and the Nasdaq is quite strong. It's all bullish. Triple trender recently turned to a score of 4. You can also see the radar 3 value is positive on all of those. If we're trying to figure out where the money is going, well, we can see in the sectors here, the retail sector is still quite strong, and as well as the consumer discretionary, and the biotech is quite strong as well. Looking at some of these other relative ETFs, everything's showing a lot of weakness. The bonds, the junk bonds, the different ones that are often signs of a reversal, like a short ETF and others, they're all pretty weak. So we're not seeing an imminent reversal in the market, but if we want to find out where in the world the money is going, we can look at some of these regional ETFs and find something. It looks like these are all turning green, but they're still pretty low scores. We're looking for something that's got a high score and it's all green, like the EWT, the Taiwan ETF, is looking pretty good. And RSX has got a 3, and it's pretty bullish. So right now I would say that the strong indexes are the Nasdaq and the Russell, and if you're looking for a region to invest in, I would look in Taiwan or Russia. Taking a quick look at some of these indexes, we noted that the Russell is leading the pack. So as we look at the daily Russell futures contract, we can clearly see that a week ago or so it broke out from this trend line. It's above our resistance lines here at 1005. The Russell is clearly bullish. Everything, the radar 3 trend strength is bullish. Fear greed is showing a stronger buying than we've seen in quite a while, and the triple trender is bullish. So this is a bullish market. I wouldn't jump in at this point. The train has left the station. Might look for a pullback. And in fact, we might see one of those coming up. We see with radar 2 exiting the overbought zone that we may see a slowdown, if not a pullback, here in the near future. As far as some of the other indexes, there's the Nasdaq, which we said was also leading the S&P in terms of strength. And you can see it has also broken out of its resistance here at 3,048. And things are pretty bullish again. Strong buying into fear greed. We did get that nice pullback divergence. You can see in the radar 1 where we had lower lows in the oscillator, higher lows in the price. So everything's looking pretty bullish again. This is also overbought in the radar 2 price leader, so we may see it test this breakout level a little bit, but all in all the trend is still clearly an uptrend. Here's the S&P E-mini futures contract. we can see that ES2 has had a breakout from the downtrend line, but in this case it has not surpassed the highs of mid-May of 1679.75. We're up against that resistance point just about now. You can see I set my alert line on my fear greed indicator to the previous highs here in mid-May, and we've breached those quite convincingly. So a lot of buying going on. You can see radar 3 here is bullish, yet the radar 2 is still showing the same overbought and pointing down indication that it was showing in the other indexes. So again, I might not be surprised to see a bounce off of this resistance, but all in all, the trend is still up. Since my general outlook on the market is bullish, I decided to scan the markets for a bullish tradable setup. And the way I decided to look for this setup is to find some stock that combines the Arps deep dip double divergence and the deep dip triple divergence, also known as the sweet pea divergence signals. So I'm looking for something in this universe of stocks that had both a deep dip double and deep dip triple within the last couple of bars, a bullish one. And so I'm going to sort on my scanning tools here, sort on bars ago. You see we got bars ago, and see if I can find something that has already got a bar or two of profit in the right direction. And it looks like here's a few of them, everything from MTH, PTY, Qualcomm, and Ryland. And let's take a look at Ryland. Okay, here's the Ryland chart, and you can see that yes, we did get a deep dip double and deep dip triple signal, both on recent bars, about 2 bars ago. And this is one that I like compared to some of the other ones. I particularly like this one because when it made its highs, it did not show me a bearish pivot divergence, and as it's been making these lows, we got a beautiful pullback divergence to this point here. We got lower lows in the oscillator and higher lows in the price, and then we had this little pivot divergence in the oscillator and price here. The oscillator, of course, the fear greed indicator. So this looked like a pretty good buying opportunity, and I like the fact that it has just recently broken above. Looks like it's still kind of testing a break above the downtrend line. So we're going to see if Ryland Corporation is tradable to the upside. Let's take a look at the daily gold chart for just a minute. Of course, we all know that this has been in a bearish trend all year long, and we've been getting these overbought and oversold signals from our Trend Exhaustion 1 tool throughout this trend. And notice how when you get this oversold at the bottom, you get a nice, often it shows a little bounce. That basically means that the deceleration has kind of maxed out for a short while, but it doesn't mean that it's necessarily the reversal of the trend. It just means it's bouncing here. Whereas when you get the overbought signals in the direction of the trend, these are going to be much more effective signals in the long run. So we see another oversold signal here at the bottom just before July, and so we're seeing the bounce off of that. But I'm not convinced this is a reversal signal. I don't see any divergences yet in my fear greed indicator. Radar 3 is still below 0. So I'm looking for this bounce. And maybe come back up here and check resistance at 1322 from this previous low. Maybe find some resistance at this downtrend line. And at that point I would expect to potentially see an overbought signal being generated by the Trend Exhaustion 1 Radar 2 oscillator. Let's look at the intraday chart here, the 4181 share chart on gold. Notice how all of these congestion zones tend to bounce off of these support and resistance lines. Here, even down here it comes back and just about tests that same line. And we're going to see another test of this support and resistance line up here somewhere around 1296 quite soon. And there's no indication actually that this upward bounce is likely to end anytime soon. As noted on the daily chart, I actually expect this to go up into about 1322, where the next resistance is. So in the short term, I would say gold is bullish, but I think we have not seen the end of downward movement in the gold chart. And let's take a look at the crude oil market. It's been one of my favorites to trade in the last week. As you know, it's been trending up nicely. And this upward movement that we've seen has actually kind of started in mid-April after we identified a beautiful divergence that began from, let's say, November of last year. We got lower lows there, and then this divergence was again confirmed or reiterated, let's say, from late February when we found these divergences against the fear-greed indicator. Since that point, crude oil moved up into its trading range here, as identified by the support and resistance lines, moved sideways through much of the spring, as you know, and finally it has broken out of these support and resistance lines in the last few weeks. In fact, this past week we finally broke through this significant 104.3 level, came back, have tested it, and are still pretty bullish on crude oil. Let's take a look at an intraday chart. Here we can see the 6,500 share chart and the nice uptrend we've been in for the last week. But take a moment to look at this. These divergences in radar 1, fear greed, as we approach the top. This was a pretty clear sign that we were topping out in this part of the move. So I'm seeing this daily bullish trend likely to experience a pullback in the at least in the first part of the week. You can see we're already bearish in the radar 3 trend strength. So these divergences in radar 1 give me a good indication that we might be seeing a little pullback. I want to thank you for taking the time to watch this short video from Jan Arps Trader's Toolbox. And I want to remind you that all of the examples provided today are for purely educational purposes. Jan Arps Trader's Toolbox is not recommending that you buy nor sell anything. In fact, trading equities, forex, currencies, futures, all of these can be very hazardous to your account. We're not licensed to recommend that you buy anything, but we are licensed to make some great technical analysis tools. So may the trend be with you.